Hello and welcome to this week's edition of Echo45 Advisors Market and Economic Update. The stock market rally has hit a snag as investors debate the timing of the Fed's first rate cut this cycle. At the same time, many asset classes have performed very well this year, capturing the attention of investors. This includes gold, Bitcoin, and large tech stocks. In the next few minutes, we'll explore how investors should think about these asset classes as a component of a larger portfolio. As always, it's important not to lose sight of the big picture. First, gold has reached a new all-time high, around $2,185 per ounce based on the price of futures contracts. Gold has rallied sharply as investors anticipate that the Fed will cut rates later this year. Rate cuts can be good for the prices of gold and other commodities because lower interest rates on bonds and cash make hard assets more attractive as a store of value. While gold has rallied significantly since the bottom in 2022, the S&P 500 has actually performed better over that period. This chart shows that's not only the case over the past 2 years, but over a much longer time frame as well. While gold has done well in certain time periods, especially right after the global financial crisis, investors who stayed patient in stocks ultimately outperformed. This is not to say that stocks are always better, but that all assets can play a role in a well-balanced portfolio. This has been the case despite investor worries over fiscal and monetary discipline, geopolitical concerns, and more. Similar to gold, Bitcoin has made significant gains this year. This is also partly due to possible Fed rate cuts, which increases investor interest in assets that can be a store of value. Bitcoin has also benefited from two other factors. The approval of spot Bitcoin ETFs in January has led to flows into these funds. Additionally, there is something known as the Bitcoin halving, which is occurring every 4 years, and that might reduce the amount of new Bitcoin mined in the future. For whatever the reason, it's clear from this chart that Bitcoin and other cryptocurrencies are extremely volatile. So, like gold, the question is not just whether to invest in the asset class, but how it relates to the rest of a portfolio. While digital assets are still new, it's clear that they are volatile and can have a high correlation with other risk assets, including stocks. So, what matters is balancing these assets in order to achieve an attractive risk-reward ratio that fits your financial goals. The same is true for the stock market as well. While attention has been on large cap technology stocks over the past year, this chart shows that many other sectors have also performed well. This includes financials, healthcare, and industrials. The strong economy and falling inflation have led to a positive environment for many companies, not just those related to technology and artificial intelligence. Thus, it's important to stay diversified across asset classes and sectors, no matter how tempting it is to focus on just what's performed well in the past few months. We hope you found these insights valuable. If you'd like to discuss any of these topics in more detail, please feel free to reach out. We look forward to speaking with you soon.